After being a lender for well over 15 years, the one thing that I've learned is that solutions equal dollar signs. And if you don't know who I am, my name is Evie Shafran. I'm an owner of a company called Loanbrook, which is a wholesale mortgage and commercial lending shop in Los Angeles. And in today's video, what I want to do is share with you 4 different ways that you could actually get paid as a mortgage loan originator. And this is very important for those of you who are thinking about becoming a loan officer in 2025, because as you know, interest rates are somewhere between 6 and 7%, and you might think to yourself, would anybody want to use my services? Isn't lending really slow nowadays? Would I be able to make any type of a living with it? So I think for those reasons in particular, this video would be very important to help you kickstart your journey. The only thing that I ask is that if you enjoy this video, please give it a like so other people like yourself can find this information on YouTube. And with that, let's get started. What are 4 ways that I can get paid as a mortgage loan originator? Well, clearly, I'm going to start from the top, and this might be the reason why you are thinking about becoming a mortgage loan officer, which is originating conventional loans. All right. And so there's nothing wrong with that. The only challenge with originating conventional loans is that they're very rate driven. And for those of you who have gone through the lending cycle of 2020 to 2022, you would know that a lot of people locked up their interest rates for a period of 30 years in a much lower bracket of, like, say, 2 to 4%, which means that in today's market, February 2025, there's virtually very, very little refis, right? And most of the business is actually purchases. Now, here's the deal. Typically, when you get into lending, there's about, I would say, somewhere between a 60 to a 40% ratio to refis to purchases. And that's why in today's market, we're basically, I'm going to say, 90% purchases. So you're thinking, all right, there's no refi market, basically, right? Maybe 10% if we're lucky. 90% of the business is purchases, which means you have to be a rock star at making connections with real estate agents, because that's who basically controls the purchase market. If you watch my other videos, you would know that. All right. So how do we play this out? Is it worth it for me to dive into this career in 2025? The answer is absolutely yes. I'll explain to you why in a minute. Simply because there are 3 other ways that you can get paid outside of just doing conventional loans. And if we're going to take 3 steps back and ask ourselves what exactly would fall into the category of conventional lending, it would be any loan that is sold to either Fannie Mae or Freddie Mac. And then in some cases, if it's a higher loan amount as to what you could sell to Fannie and Freddie Mac, then it would be a jumbo loan. And all those are typically considered conventional / jumbo loans. Those type of loans are the loans that you are using either tax returns, right? Taxes, if they are self-employed, or you would be using a W-2 and a pay stub if they are a wage earner. And then typically you can't use more than 45 to 50% of their gross income to qualify them. That's, again, bucket number 1. The nice thing about this, if somebody does fall into this and you actually can sell them a rate, then on the broker side, not on the bank side, you typically make anywhere between 1 to 2%. From my experience, on the bank side, you typically make somewhere in the neighborhood of 0.5%. All right, significant difference here in the amount of money that you're able to make. So make sure to position yourself correctly when you're trying to figure out where exactly am I going to be working once I actually get my mortgage loan originator license. A lot of people are not necessarily somebody who has that pay stub or those tax returns to validate their income. They're also known as people that are self-employed. And I'm in Los Angeles, so there's a massive amount of people that are self-employed, and a lot of these people actually make pretty good money. but the benefit of being self-employed is having your, your top line of your income, right? And then you basically write off all your expenses. And so you're left with your net. And what a lot of people do is they make the net so little simply because they don't want to pay a lot of taxes, which I completely understand. But when you're trying to pay taxes, you're trying to pay the absolute least amount of income. And when you're trying to qualify for a loan, you're trying to actually show the absolute maximum amount of net income. And so those are the differences. The nice thing about that is you have a solution for this. And what I've learned after 15 years of lending is that solutions, I'll put this up here for you, solutions equal dollar signs. And that is the truth. That is the absolute truth. Because when somebody's trying to get qualified for a loan, especially if there's already a property or a transaction in place, and they need the money, they will jump through any hoop that you put them through simply to qualify. And that's why I love option number 2, alternative documentation. You might have known about it as subprime, and it's also known as non-QM. And so whereas before we had to use the tax returns to qualify, in this particular bucket, no tax returns are actually needed. And therefore, we could go to alternative sources of income to be able to qualify the borrower for this alternative doc subprime non-QM loan, right? All means the same thing, by the way. And so let me break that down for you for a minute. Say somebody is self-employed, right? And they have some really strong deposits. I could actually take 12 months worth of their, I'm say BS, it means bank statements. All right, I know what you're thinking. And so bank statements, I'm using 12 months of the gross deposits. Think about that, right? Assuming no transfers, because can't really document that. And then from those gross deposits, I can actually multiply this, for the most part, just giving you the framework, by about 50% for expenses. And I could actually use 50% of the income to qualify for housing or anything, any type of a loan that I'm trying to put together here. So this gives me a complete opportunity to still qualify that person who basically wrote off all the income from the tax return into a loan that is maybe going to be plus minus a % or so higher on the rate. But the beautiful part about it is they could still qualify. I'm taking their gross deposits. I basically shave off 50% for expenses. This is their income, right? And then, mind you, if I'm using, in this case, up to 50% of their gross income, right, to qualify, then it's basically half of this, and I could use that for same way I was going to do. I was going to use the income in conventional lending, except alternative type of documentation. And this is just one option, FYI. I could do the same thing with a profit and loss. The only thing is I would actually need like a CPA prepared to just basically sign off that this is in fact the income, or someone who's actually certified in taxes. I guess depends on the investor they use. But anyways, that is our, that was our number 2, alternative documentation. So you could see that if you work at a bank, this option wouldn't be available to you, because 90% of banks that I know basically only sell their loans to Freddie, Fannie Mae, and then they have their own loans, which are portfolio loans. I don't want to get too technical here, but that's their jumbo deals, right? And for those, typically, the guidelines are stricter, which we're not going to get into, but the rate is slightly more attractive, and then they keep those loans on their books as portfolio deals. And by the way, as we're moving through this, if you have any questions, just drop them in the comments below. I'll be happy to help you with it. And like I said before, if you're getting value out of this video, please make sure to hit that like button. I do want other people like you to be able to capture this information, because again, people are very nervous about getting into lending, thinking that, am I only going to be able to offer these conventional loans? and then no one's going to want to do any type of a transaction with me. It's not true if you offer more solutions, which, like I said, equal dollar signs. All right, let's move on to number 3. Number 3 on our list is unique. And again, these are not things that typically you offer people as an institutional lender, meaning like a bank, right? And so right here, we're diving into private money. Now, the thing about private money is this breaks up into several categories. And when I say that is because, you have your funds, typically called debt funds. You have a group, and then people want to invest in mortgages. So they give the group their money, and there is a fund manager. And then the manager basically disperses their money among different notes, and then they make a percentage. So that would be the first way of doing it, all right? The second thing is basically a deed of trust investor, where you actually have an individual who has money, who wants to invest in mortgages, and then you basically give them opportunities as they come up. John or Susie, I got this property here. This person it's designed for investment, by the way. It's trying to buy this investment property. It's putting down 30-40%. Would you be interested to write a check for the difference? You'll get like a 10 or 11% return, interest only for 12 months. A lot of these people are very excited about that because they diversify their money, and instead of making like 4% at the bank today, on a good note, right, they're gonna make like 10 to 12%. So they'll be like, yeah, great, sounds wonderful to me, all right? So it just depends on, there's a couple other options. I'm not going to get into it in this, but just so you know, private money is also known as hard money, and you are able to broker these deals. You might be thinking, where am I going to find this money? I can teach you that. But the point is, you broker the deal. You find the lender, you have the borrower, and you basically pitch them the deal, and for that, you put in typically anywhere between 1 or 2% origination for yourself, and then that's basically how you make your money. It's a lot quicker to close. You could close a deal like this in a week and jump through a lot less hoops than having to get qualified either conventionally with the tax returns or alternative documentation with your bank statements or profit and loss, right? So that's option number 3. And the nice thing, like I said, completely open to you in any type of an environment, any type of an economy, simply because when people need money, they need money. And if you're the person who has these type of solutions, then you're the person who's gonna be getting paid for it, all right? Option number 4 is something that I've taken a long time to put together, and if you've watched my other videos, then you're aware that I've spent the past year building something called the Part-Time Commercial Lender Academy. I'm very proud of it because it actually takes well over 10 years of my knowledge, and I packaged it for you to be able to go through the journey with a client, plug and play into the commercial lending transaction, which, by the way, is exactly the same or very similar to walking through what we just discussed, the number 3, the private money transaction. You could use it exactly in the same capacity, use all the forms, my proprietary forms that I use to this day to close all my deals, and then ultimately earn yourself a lucrative commission in the end. All right, so let's talk about that. So we have number 4 on our list, which is gonna be commercial loans. And so here's the deal. When you're thinking residential, like we know, most of the business, or a lot of the business, has been locked up for 30 years from the year 20 to 22, right? Because that's when we had those ultra low interest rates. But the challenge here is that these commercial loans, they're typically only locked up for anywhere between 3 to 7 years. So the thing is, and when you say why, it's simply because premium terms have always been between 3 to 7 years. 90% of borrowers don't take the 10 or 15-year terms, and most of the times they're not even available. And so if you know that these commercial loans are locked up for 3 to 7 years, that means that there will be refi opportunities here, all right? And there's also purchase opportunities here. Now, the nice thing about it is most loan officers do not handle this type of business. And the funny thing is, it's not any more challenging. I would even argue that it's less challenging than doing some residential loans, because a lot of times the borrowers tend to be a lot more committed. It's their business. It's how they make their money. Most of the business that you're going to see here are deals for owner-occupied business transactions. All right. And in the Academy, which by the way is available for you via link in the description of this video, it would actually teach you not only the different steps that you need to go through, the investors that you have to look at with every single transaction that comes your way, but the beautiful part about it is you can actually collect money on different milestones up front, which is completely illegal to do when you're doing residential lending. In addition to it, when you consider where you get your business, you could actually work with residential loan officers who actually go through some of their clients' book of business. They see commercial loans, they have no idea what to do with them or who to send them to. As long as they're licensed, you could participate with them in the transaction, and they can get paid through closing like every other transaction if you simply write their licensed company into your term sheet. So a huge opportunity. Now, if you think about it for a second, to be able to compete with the loan volume of doing just a single residential loan, I haven't yet seen, unless you're, in my case, transacting in like Beverly Hills, the loans are typically significantly larger. So even if you're making, let's just say 1%, right, on the residential side, and you're also making 1% on the commercial side, clearly you're going to make a significantly larger commission here. And the beautiful part about it is you can do it all part-time. All right. Hopefully this sheds some light about the 4 different ways that you can make money in doing loans right now in February of 2025. And if you're thinking about becoming a loan originator, just know that you shouldn't limit yourself. Like I said in the beginning of this video, solutions equal dollar signs. And I completely mean that, because most people in today's market may not necessarily need to use your services to try to get a lower rate. More than likely, they already have a lower rate. But if you're looking at this not as a side hustle, definitely something that you could start with, even doing part-time, I would absolutely recommend for anyone getting into lending to keep their full-time job, continue making money as you do, and then slowly learn about how you can incorporate this into your full-time schedule. And then as the market gets better, as rates go lower, you will naturally see more activity, because we're talking about loans and lending. The only thing is, when things become very hectic, at that time, the whole world jumps in and it becomes very chaotic. It's very difficult for people to catch up or get up to speed with something that they simply just want to dive into as a side hustle to make money. What I'm suggesting is something completely different. I'm suggesting you look at this as a career choice, a career opportunity, not necessarily a side hustle, something that you could do for the next many years to come. As a matter of fact, you could start with commercial and private money lending, which would actually circumvent you having to get an NMLS license, because you only need a real estate license to originate commercial business, which is incredible, costs you less education. You could dive right into it, all right? So that's it for today. Let me know if you have any questions, and if you do, please drop them in the comments of the video. I always enjoy getting your comments. Love to know what your takeaway is from this video. If you've enjoyed the video, please hit the like button, like I said, so other people like yourself can find this information. I think it's pretty valuable. And with that, I look forward to seeing you again on my next video. Take care.